What is up, YouTube, and welcome back to another video on high altitude investing. In today's video, we are going to be talking about one coin that can make you rich if you play it correctly. But before we get started, if you're not a member of the free Discord, please click the link in the description box below and get started with the free Discord. Also check out the VIP program, link in the description box below, and join thousands of other members who are profiting daily inside of these markets. And without further ado, we'll get straight into today's video. All right, so we're going to start off here on the daily candlesticks with Pepe. And the very first thing that I want to show you guys is this trend line that we have on Pepe. And we did break bearish through this trend line, and we even fell below the major support level right here on Pepe. So that's a pretty bearish signal here on Pepe. We're also watching Pepe as a short signal. Clear up here, I posted on my Twitter and let everybody know I was going short on Pepe. I've been playing this market along the way down and having a lot of fun short selling this coin. So the reason that I kind of was watching this coin to start short selling it was, well, first of all, we started getting in on Pepe and talking about Pepe being bullish down here when it was really oversold as a result of an inverse head and shoulders pattern on the bigger time frame. Now, I know a lot of people are drawing inverse head and shoulders patterns on Bitcoin right now, but you have to understand that these inverse head and shoulders patterns are generally a lot bigger than people think they are. A lot of times people try to draw inverse head and shoulders patterns and they draw little ones, little tiny ones, when these usually take a little bit more time to form. So don't get caught up being super bullish on the markets right now, trying to draw inverse head and shoulders patterns. Let a bigger pattern and structure form. Either way, we were bullish on Pepe down here really early on as a result of that inverse head and shoulders pattern, and really made a bunch of money on this coin along the way up. Well, then it started to get really overextended. And I was looking at the charts one day and I said, you know what? This looks like it's going to crash. It just looks like it's going to crash. And I realized that if Pepe crashes, then pretty much everything's going to crash because it's one of the market leaders. And I started looking at Bitcoin and Ethereum and thinking about the market a little bit more deeply and carefully than I had previously done up to that point, because I was kind of expecting things to go up. Well, we were going up right here. But I started to take profits on things and realized, okay, the market's going to pull back. So that's when I started warning you guys, hey, the market's going to crash. Be careful with Bitcoin. Be careful with Ethereum. I'm shorting Pepe. And letting you guys know, hey, this market's going to pull back. It's going to crash. And we did start to get that crash in the markets. And you can see that that's very evident in the charts. And I personally think we're only getting started. A lot of people think, oh, we're just going to buy the dip now. We're going to go back into fairyland bull markets. I don't think so, right? We just barely started crashing. When crypto crashes because it's overextended, it usually takes a minute for it to recover. A lot of times it goes down pretty far before it recovers. So let's go ahead and draw the Elliott waves here. We have wave 1, wave 2, wave 3, wave 4, and wave 5. And now I'm personally expecting a bigger correction on Pepe. Now wave A, I think, will go a little bit lower here. I bet wave A goes down to who knows exactly what price point. I've got a couple support levels I'm watching, but I bet wave A goes quite a bit lower here before it really crashes or bounces again after the crash. And then we'll crash again on wave B to wave C, between wave B and wave C. Now, why do I think this is going to happen? Well, it's very common for the crypto markets to do this. If you go back and look at historical cycles, for example, crypto.com, you can see when crypto.com started crashing, let's go ahead and use a different chart where we've got a little bit more historical data, like KuCoin. Yeah, there we go. So you can see that when crypto.com started crashing, wave A was right here and wave B was right here. Wave B was very small and wave A was pretty big, right? And wave C was even bigger. Wave C was huge here on crypto.com. So it's really common for once the crypto markets start crashing for these C waves to be pretty big, to be pretty significant. And just being aware of that really helps you profit on these markets best, so you're not stuck in these coins holding through a massive correction, losing all of your profits when you could have profits taken off in cash and be shorting the market and making money while everybody else is panic selling, right? So that's kind of the goal here, is to play the market correctly and have some cash on the sidelines. So when things do get closer to their bottoms here towards the end of the summer, then you can really buy these markets up and purchase them at very, very cheap prices. So with Pepe here, you can see that we do have 5 waves up, and we've started to make that A wave correction. We fell below the support level of wave 3, so it's pretty likely that we go lower here in wave A before we have wave B. And again, wave B does not have to be big, doesn't have to be some big bounce. It can be very small before it goes lower here. Now, will I buy back Pepe when we get closer to these levels? We're going to have to see. I probably will. I probably will pick up some Pepe once it's very, very undervalued. But right now I see a lot of weakness in the markets. A lot of weakness in Pepe and a lot of weakness in other coins as well. So let's talk about other coins, because obviously Pepe isn't the only one that's crashing. I've been talking a little bit about Ethereum having a correction. Well, actually quite a bit about Ethereum having a correction in these videos for multiple videos now, letting you guys know, hey, I think Ethereum's going to have a big wave C that's going to shake a lot of people out. So we've started to fall from wave B down here to about 3,300 per Ethereum. And what I'm expecting to have happen here is a push a little bit lower before we can bounce, and then we can bounce again down here a little bit below support and really make a nice Elliott wave structure along the way down. Because a lot of people don't know this, but in between wave B and wave C, there's Elliott waves. So there's Elliott waves, A wave, B wave, and C wave, but there's also Elliott waves between wave B and wave C. So in order to count those, you go wave 1, wave 2, wave 3, wave 4, and wave 5. So there's 5 waves down along the way down, and you can play those, but really the best thing to do is just to take your profits on your short positions near support and then short the bounces, right? Almost all of these bounces, people were getting really bullish on the bounces, but all of them have failed. All of them have went lower. Why? Because we're in a bigger corrective structure here with Ethereum and with the rest of the market. And so the name of the game is actually to short those bounces, right? Or even short the week when you fail support, you can short that as well, because you're going to fail support on smaller time frames and go lower, and you can short those support failures, and you can also short the bounces along the way down. So that's what I'm expecting here with Ethereum, is that we do go lower over the summer, and later, after this correction is over, then I think Ethereum will be one of the best buys out there. It's going to be a really, really good buy after the correction, after we pull back. Now, because Bitcoin's pulling back, because Ethereum's pulling back, because Pepe is pulling back, the whole market is weak. So there's really not a lot of coins that I can confidently say that you should buy that, right? There's always low caps that pump a little bit, but really the name of the game is to have cash on the table. We're on a risk-off scenario right now, and to be short selling. If you don't know what short selling is, because some people have been asking me, what is short selling? I know it's kind of a concept that a lot of people don't understand. Well, short selling is basically when you're able to profit off the market going down rather than it going up. So you're betting on the market going down. And you don't have to have a lot of leverage to do this. You don't need 50x leverage, because leverage means that you can have more money than you're initially investing with. You really only need like 3 times or 3.5 times leverage, or even 2.5 times leverage, right? That's all you need to short these markets. You're not trying to borrow a bunch of money you don't have and go short on the market. You're just trying to borrow a little bit of money and then basically make money on it going down. The purpose of short selling is that you can trade the market in both directions, right? That's the purpose of leverage, is so you can trade going up and trade going down, and it doesn't matter what direction the market's going. If you're in a risk-off scenario, you can have cash in your portfolio and have short positions open so that you can short the market and make money and actually reduce some of your risk from the market going down, right? You're actually reducing your risk by going short on the market. Because if you keep your whole portfolio inside of the markets, your exposure to the markets is very high. So that's where you have cash, then you take some short positions, and you're actually reducing your risk by going short because you're making money off of that risk-off scenario. You're actually able to profit off it going down instead of having all your money in the markets. So it's a way of reducing your risk if you actually do it correctly, but it's also a way to profit, right? The amount of profit that we're making inside of the VIP group, and everybody in the VIP group, they're sharing testimonials, people are messaging me, like it's exciting right now. Why? Because we're actually making profit short selling the market along the way down. And so, yeah, you can make a lot of profit short selling. Yes, it's to de-risk. It's to avoid having too much exposure long or too much exposure inside of the markets, but it's also you can make profit, right? You can make money off the market going down. Now, after a big correction like this, it's really not a good idea to hold your shorts, especially as we get closer to major support. And that major support level here with Ethereum is going to be a great place to take profit on those short positions and start putting that cash back into the market. There it is, there's a rectangle. Putting cash back into the market down at these levels. You don't want to hold your short positions near these bigger support levels. Now, for now though, I'm expecting a lot of downside, and the name of the game is to be short. The name of the game is to be shorting the market and playing it along the way down. Now let's remove all the drawing tools and talk a little bit about the technicals here on these coins. Let's start off with Ethereum, and we'll go back up to a higher time frame, like the 10-day time frame. You can see that on the 10-day time frame, we do have a huge rejection off of resistance. And our major support level isn't until clear down here. We have a little bit of support right here, but really we don't have a major support level until this area here on Ethereum. This is kind of an average support level. I suspect it to fail with how strong that rejection is and how much we have a double top structure here, at least in the short term with Ethereum. So that double topping structure up here, I think will take us back down to this lower support level here with Ethereum before we can go higher. So the name of the game is definitely to be short on Ethereum or to be in cash, and definitely, to be risk off right now with Ethereum. So the other thing I want to show you here is along the way down, we did have this bounce up. Now along the way up, it's very expected for us to have a correction down before we go higher. A lot of times these markets mirror themselves. Along the way down, they'll make a certain pattern, and along the way up, they'll make the same pattern, only inverted. And this whole area right here, where we have this bounce along the way down, if we're doing the same thing inverted, we should have a correction along the way up that pulls us back down to support before we can go higher here with Ethereum. So that's kind of my views on Ethereum. Let's go back over to Pepe and talk about some of the technicals here on Pepe as well. If we remove all the drawing tools, you can see in the bigger time frame that we're very overextended. We had a huge pump here, and we're falling off a cliff. We have these big red candles that's showing a strong rejection inside of the market, and we're not even near our support level. Realistically, the support level, you're going to ignore these wicks and go to the candle bodies, and we've still got a ways to that support level, and then we've got an even bigger amount of space between where we're at right now and this support level here with Pepe. So I do think we will go lower here with Pepe. There's a lot of people trying to hold on to the market, a lot of people in denial, anxiety. It's following the Wall Street cheat sheet, the human emotion, perfectly. It's just a prime example of what happens when people are too excited about it going up. They hold on to their investments, a bull trap happens, and the market's really in euphoria up here and has to come back down to reality before it goes higher again. So yeah, I do think we will go lower here. There's a lot of technical reasons for that. Again, we have these huge rejection candles. We're a ways away from support, major support level, which is going to be the body of the candle and not these candlestick wicks. And also we have this profit taking up here. See that big wick on top of the candle? That's a huge profit taking candle on the bigger time frames here with Pepe. So let's talk about the total market cap, because the total market cap is another example of what I'm talking about. Look at this on the total market cap. You guys can see that we had a huge rejection candle on the 10-day and a lot of profit-taking candles up here. See those wicks on top of these candles? That's profit-taking. That's the same kind of thing that happened right over here, where we had profit-taking and profit-taking on those candles. Big, huge wicks. And then the rejection candle as well, where you get a big red rejection off of those peaks, and the market starts to drop as a result of that rejection. Now, I don't think we're going to have a correction this big. I don't think we're going to have a correction that was the size of the correction that we saw in 2021. But these candlestick rejections can easily take us back down to, again, major support levels here at the total market cap, which would be this area right here in total market cap. And that's a little bit big. I'd probably go more like that and then make it green, nice in green color, to signify support rather than resistance. So I do think we will go lower here in the total crypto market cap and shake a lot of people out over the summer before we can find support. I'll be buying the market down here, and I'll be closing my short positions on crypto. So yeah, that's my view on the total market cap. Let's talk a little bit about Bitcoin as well today. Bitcoin, again, we talked about Bitcoin in previous videos. I see Bitcoin as being risk off right now, not risk on. We're at all-time high. We're at the all-time high resistance levels. We're rejecting off of them, and yet people are still holding on, trying to see the market as being bullish. This is exactly the kind of human psychology that takes place when people are too greedy. When people are too greedy for more upside in the market, you have to shake people out, and that support level here on Bitcoin is a ways away. That major support level on Bitcoin. We're mainly at all-time high resistance up here and rejecting off of that all-time high resistance. And if we move this Elliott wave tool away and delete this drawing that we have on Bitcoin so you can see a little bit more clearly here, you'll see that this is a huge rejection candle, right? That's a big rejection off of resistance. I think we're going to break lower here on Bitcoin and come back down to reality before we can go back up. That's what I see inside of the markets. That's my views on Bitcoin. Again, you guys, join the free Discord, completely free, link in the description box below. You guys can also go into the knowledge and links section, and I've got trading patterns that I've been making in there. Been making a whole bunch of trading patterns. They're common trading patterns. I've been using my Paint software to go ahead and create these trading patterns for you guys, so you guys can see what trading patterns we're using to play these markets. Completely free. Go check that out. Also, check out the VIP link in the description box below, or you can message me directly on Discord, whatever's easier for you. Probably just go ahead and click the link in the description box below unless you want to talk with me personally. But yeah, check out the VIP. Join the VIP community. There's over 2,000 other members in there, and people are having a lot of fun. And yeah, join the VIP. It's worth it. So yeah. And I look forward to seeing you guys in future videos. Hey, thank you guys so much for tuning into today's video. I love and appreciate every single one of you. If you enjoyed this video, please do me a favor and share it with your friends. And I look forward to seeing you guys in future videos. As always, stay profitable out there.